is Cecil B. Moneygetter, host of Money Talks, a new financial news upload that is laser focused on digital finance, cryptocurrencies, robotics, electric vehicles, stocks, the cannabis industry, and much, much more. Tune in and join us every Monday, Wednesday, and Friday at 7 p.m. Eastern on our Information Meets Execution YouTube channel as we bring you financial news uploads, one trending topic at a time. And don't forget to stay listening, because money talks. Good evening, good evening, good evening, good evening. Today is Wednesday, August 28th. And before we get started, I would like to apologize for this evening's late upload. Our tardiness is due to us watching NVIDIA's earnings call, where NVIDIA exceeded expectations yet saw some stock pullback. This caused our delay, yet we would like to thank you for your patience as we bring you your latest upload of Money Talks. And first up, we have news from Wall Street. NVIDIA's Q2 earnings, semiconductor stocks to look at, and many are wondering why the stocks have had a pullback, including myself. But let's get started with our first story. Several semiconductor stocks are volatile in Wednesday's after-hours session after NVIDIA Corp reported financial results for the second quarter. Here's a look at some of the biggest movers in the chip space on this Wednesday evening. Advanced Micro Devices Inc. closed down 2.75% at $146.30. Micron Technology Inc. closed down 3.07% at $94.86. Supermicro Computer Inc. closed down 19.02% at $443.49. Taiwan Semiconductor Manufacturing Company Ltd. closed down 0.79% at 169.20 cents. Intel Corp closed down 2.29% at $19.61. Marvel Technology Inc. closed down 1.82% at $68.44. Now, what happened with NVIDIA? After the market closed this Wednesday evening, NVIDIA reported second quarter revenue of $30.04 billion, beating the consensus estimate of $28.684 billion. The leading AI chip maker reported adjusted earnings of 68 cents per share, beating analyst estimates of 64 cents per share. Hopper demand remains strong and anticipation for Blackwell is incredible. NVIDIA achieved record revenues as global data centers in full throttle to modernize the entire computing stack with accelerated computing and generative AI, said Jensen Huang, founder and CEO of NVIDIA. NVIDIA expects third quarter revenue of $32.5 billion plus or minus 2% versus estimates of $31.77 billion. The company anticipates gross margins of 74.4% and adjusted gross margin of 75% in the third quarter. Now, the company's board also approved an additional $50 billion in share repurchases. The additional buyback approval does not have an expiration date. NVIDIA shares are sliding despite beating expectations, likely due to the remarkable run in shares over the past 2 years on the back of surging demand for the company's AI chips. Several other players in the semiconductor space have benefited from the AI boom, as well as often trade in sympathy with NVIDIA. NVIDIA's conference call, which is set to kick off at 5 p.m. Eastern, could mark more volatility across the space after hours. There are still some chip names that are yet to report results for the period. Marvel Technology is due to report earnings results after the market closed on Thursday, and Micron recently rescheduled its quarterly results for next month. Nvidia shares were down 5.56% after hours, trading at $118.62 at the time of publication Wednesday. Get in the comments and let me know what you think and how you feel. And up next, news from FinTech. Why Payoneer Global might just be ready to take off. Payoneer Global Inc. could be a solid addition to your portfolio given a notable revision in the company's earnings estimates. While the stock has been gaining lately, the trend might continue since its earnings outlook is still improving. Analysts' growing optimism on the earnings prospects of this company is driving estimates higher, which should get reflected in its stock price. After all, empirical research shows a strong correlation between trends in earnings estimate revisions and near-term stock price movements. This insight is at the core of our stock ratings tool, the Zacks Rank. The 5-grade Zacks Rank system, which ranges from a Zacks Rank number 1 strong buy to a Zacks Rank number 5 strong sell, has an impressive externally audited track record of outperformance, with Zacks number 1 ranked stocks generating an average annual return of plus 25% since 2008. The Payoneer Global Strong agreement among the covering analysts in revising earnings estimates upward has resulted in meaningful improvement in consensus estimates for the next quarter and full year. Current quarter estimate revisions. The company is expected to earn 0.05 cents per share for the current quarter, which represents a year-over-year change of 0%. Over the last 30 days, the Zacks consensus estimate for Payoneer Global has increased 7.14% because one estimate has moved higher compared to no negative revisions. Current year estimate revisions. For the full year, the earnings estimate of 0.25 cents per share represents a change of plus 4.17% from the year ago number. The revisions trend for the current year also appears quite promising for Payoneer Global, with one estimate moving higher over the past month compared to no negative revisions. The consensus estimate has also received a boost over this time frame, increasing 8.57%. Favorable Zacks Rank. Thanks to promising estimate revisions, Payoneer Global currently carries a Zacks Rank 2 buy. The Zacks Rank is a tried and tested rating tool that helps investors effectively harness the power of earnings estimate revisions and make the right investment decision. Our research shows that stocks with Zacks Rank number 1 strong buy and 2 buy significantly outperform the S&P 500. Get in the comments and let me know what you think and how you feel. And up next, in cannabis industry news, Home Depot will no longer be testing for marijuana. Home Depot Inc., one of the U.S.'s largest employers, is planning to do away with marijuana testing for prospective employees and discontinue drug testing for the majority of its workforce. The big box retailer, which employs some 400,000 people in more than 2,000 locations around the country, announced internally on Monday that marijuana will be removed from all drug panels throughout the company's U.S.-based operations, according to a memo obtained by Marijuana Moment. The changes are set to take effect on September 1st. According to the document, cannabis will be eliminated from all drug panels in the U.S., including tests conducted after workplace accidents or when there's reasonable suspicion of employee impairment. Although workers regulated by the Department of Transportation will not be affected by these changes. Home Depot circulated the memo from the Human Resources Department to staffers. Home Depot continually evaluates our policies, the external environment, and benchmarks with other companies to ensure we remain competitive while complying with local, state, and federal laws. Read the memo, the contents of which were reportedly first circulated on a Home Depot linked Reddit forum. States also taking on drug testing reforms. Some states have passed legislation designed to shield workers from disciplinary action for consuming cannabis. California barred employers from asking job applicants about past marijuana use, and most companies are barred from penalizing employees over legal weed use when workers are off the clock. Washington State prohibits companies from refusing to hire someone based on past cannabis use, though the law does not protect employees from penalties incurred as a result of use of marijuana outside of work. Other states and jurisdictions include Connecticut, Montana, Minnesota, New Jersey, New York, Rhode Island, and Washington, D.C. have expanded their policies to limit cannabis testing for both new hires and existing employees. Get in the comments and let me know what you think and how you feel.